Good morning, good afternoon, or good evening. No clue what time you're watching it, but it is Sunday evening for me, Sunday morning for you guys, 9:56 a.m. over there on the East Coast. I hope you're going to have a nice, warm, sunny day. Not as warm as it was over here, but at least you'll have some sunshine to go out to. Kevin Hart going to be in concert over there in Tampa, May 18th and May 19th. He's in LA May 10th. None of you can afford tickets for that. And he will be in Newark and Westbury at the end of June. I suggest if you have an opportunity, definitely go out there and take a look at it. So, looking at this week, Monday, nobody that I care about, but a couple of you do like Domino's Pizza. After the open, I will have some Domino's Pizza for you. Good way to start off the week. On Monday afternoon, again, nobody I care about, but some of you do. So if you do, let me know. 98% chance I have the chart already drawn out, and I'm happy to give it a look and give you an opinion on it. On Tuesday morning, we get PayPal, which incredibly, I believe, top of my head, is still trading at about 75, 80% from its all-time highs and a PE ratio of somewhere in the single digits. I really don't understand why PayPal isn't more, but I understand PayPal is from the generation when there was still fax machines. McDonald's in the morning on Tuesday, we devoured McDonald's in the beginning part of the year. And as it is right now, I still continue to watch it, but I just don't see that much meat on the bun. So I've not spent time alerting it. On Tuesday after the close, big day. Now we get started. We got Amazon and we have AMD on Tuesday after the market closes. Starbucks is there too for all of you triple latte, vanilla shot, blah, 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 fucking fizzy wizzy craps. Starbucks is there as well. Riot, some of you like it. Pinterest, some of you like it. I don't know why, but they're there. Wednesday morning, you have Pfizer, scam, COVID, CVS Health. Everything's locked up because people are stealing everything. MasterCard, Norwegian Cruise Line, Kraft Heinz, Marriott, and again, nothing of extreme interest on Wednesday morning because on Wednesday afternoon, we have the FOMC meeting.
Sure, there will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more smaller and medium sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
And yes, that is Jerome Powell talking about the bank failures. Bank failures that are going to be a dime a dozen as we go through the course of 2024. Just had one happen over the weekend with Philadelphia. Wednesday afternoon doesn't really matter because the FOMC meeting is on Wednesday, and then on Thursday, again in the morning, Peloton. Again, I do not wish anybody to trade Peloton options. Moderna, the bigger scam of COVID, and we have traded that quite a bit. But then Thursday afternoon, after the market closes, the Coinbase, which is well up and abroad that 208, and more importantly, Apple. Apple ends earnings season. Yes, you do still have NVIDIA coming out next month, the Ponzi scheme, blah, 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 but Apple ends earnings season. It's all over. And Apple will be reporting on May the 2nd. The reason that is significant is because on May the 7th is your new moon. So your window, as you know, full moon, new moon, plus or minus 3 trading sessions. May 7th happening to be on, let me just make sure I am not talking shit out of the side of my ear, is on Tuesday next week. So May 3, May 7th, so that would be 632. So Thursday or Friday or Monday, earliest that we should expect any kind of new moon indicator. So let me bring you back through the week. Not start with spreads, but starts with SPX. As we started the week out, having had 3 red weeks in a row, as I said, trade of the week, right after the open on Monday, we are getting a green week. We are closing above 49.8733, and your 49.87, sorry, your 49.80, 49.85, or 49.85, 49.90. My memory doesn't remember, but it was in your email, it was in your chat room. $2.50 credit, full credit on Friday, closed above 49.8733. 4 of the 5 days of the week closed green. Although on Wednesday, April 24th, just before Meta reported, you're a little shaky there, just closing up 1 point, having closed below the open after that gap up above 50.70, 50.84, going back down there below that. Big problem, 50.55, and then seeing the big drop there on Thursday, knowing that, yes, we were pretty oversold and we were going to be getting a bounce, and we started bouncing there on Thursday, right back up to the problem area at 50.55, and then you had your major 36-point gap up. Very similar to the 32-point gap up we had at the beginning of the month on April 4th, which absolutely collapsed. And the gap up came on a very, very bad inflation report. 3 during the course of the week, with the one on Thursday and the GDP being the catalyst for that big drop to the downside. But nobody cared, because charts are charts, and charts are always going to do what charts are going to do. So we got a green week, 112 points, 551, 1462 being the high of the week. And as I shared over there on Friday, well before the opening bell, the 5100, 5105 calls. Yeah, where was it? Right up here. Right as futures opened up on Thursday night, 5105, 5100 calls getting $3. During the course of the day, 8:30 in the morning, they were back to 250. Later in the day, as we broke above that 5100, 5105, they were getting even better credit. And as you saw on the close, you closed at 50.99.96. So you not only got full credit, but you got 4 cents to go and throw out the window at somebody that's driving by and honking their horn too loud at you. So what I threw out there for you there on Friday, prior to the close, hour before, Monday's closed down. Don't forget this. Monday's closed down. Monday's trade, 5105, 5100 calls, looking for a red close below 5100 on Friday, 250 credit. So for those that took it, great. For those that didn't take it, watch it. Because as we went into last week, like we started the week out, we knew without a shadow of a doubt, we were going to get a green Monday. That's why that trade was not on the table for last week Monday. And as you saw over there on your spreads, Monday, April 22, we got 100% on the 49.85, 49.90 puts right there. Actually, I need to go and mark that down over here, because that was the trade of the week closing. 49.85, 49.90. There's my American flag. There you are. Boom, 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 boom. Come on, American flag. Throw it in there. Ba-bam. Move it over to the left and get rid of that green. Bam. There's your trade of the week. Get there. 49.85, 49.90 puts 100%. The 5105, 5100 calls, $3 credit, $2 risk, 150%. Shook a lot of people, but you got your 150% at the end of the day. And at the end of the day, you could actually see it during the course of the day when everybody was going, ooh, wow, 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 wow. The majority of your move came on the gap up. And after you started to look at the health of what was going on in the market, it was a complete scam. Google, heavyweight. Amazon, heavyweight. Nvidia, heavyweight. Microsoft, heavyweight. AVGO, heavyweight. AMD, decent heavyweight. Apple flat, Meta flat. That was your move. That was your move. That was it. Everything is inside the QQQ. Can't say it too many times. And on the QQQ, we got the green week. And surprisingly, we actually did get that much bigger range than I thought you were going to be able to get the course of this week. We got a 13.69 close above the open over there on Monday, 417.31. Came back down to visit it again there on Thursday, 418 after Meta, after the GDP, after the inflation data. And then they decided that Google, not Microsoft, but Google was going to save the world. And we got up not only into the 430s, but closed in the 430s. So nice week, very well expected. And we have our new buddy being IWM. IWM did absolutely fantastic during the course of this week. On Friday, didn't get that 198 drop, didn't get that 197 drop, but you got a very tiny little week last week. And there you go. Did not put that in there. So let me go and do that. The high of the week being 199.32 minus the low of the week being 192.90, a 6.42 point range during the course of the week. And again, got your gap up, got your tiny little range there on Friday, and we're going to look over that as we move on to the charts because I really don't have that much to cover on you. I've already covered this in numerous different ways, and now all we're doing is looking at a larger summary of it. Big move down, boom, boom, boom. Don't have all of it on the screen because I'm on the 20-day. I'll move it to the 30-day, and here you go. Coming off your all-time highs, your 1, 2, bang, 3, right down to the 361.8 extension, coming off of the 1, 2, 3, 4, 5 for that wave 3, right to the 250 extension. Perfect. All of it worked out perfectly. And with the gap fill that we were looking for, if you recall, all of it worked out perfectly. On the bounce, coming here into, since the bounce was just a few days ago, give me a second and I will allow technology to help us out. There we go. Coming off the bounce from a week ago Friday, down at that 49.53.56, expecting that we were going to get a green week and a green Monday. We have a 1, 2, 3, 4, 5 right up to our highs there on Tuesday afternoon. An ABC as well, so it doesn't matter how you look at it. We still wound up going to the exact same level that we expected to go up to, right around that 50.90 area, right around that 59.82. On the downward move, little bit of a move down, little bounce, your big gap down, right down there into Thursday. You've got your A, you've got your B. Perfect. With the move that we have going up off of the lows there on Thursday into Friday, right up to that 5100, 5102, 5125 that we discussed during the course of the week, it was very, very plausible, very possible, right up to it. I do not think that we have all of wave 4 to the upside yet. I do think that there is a slim possibility for a couple of days here, Monday, Tuesday, with Tuesday being Amazon, we could definitely have ourselves a little dip here on Monday. And then on Tuesday, Amazon reports. We get our nice little move to the upside right around that 51.25, even up to that 51.50 area. And then the FOMC meeting comes on Wednesday. And once the FOMC meeting is out on Wednesday, we have all the answers that we could possibly want to have, and everything starts to get hunky-dory as we go into May. And May is where I expect that we're going to get our bottom. Looking over here at the same time frame, coming from the all-time highs, very clean over on the SPX that we use daily. Nice, almost 6% decline. Don't know how many percents this is to the upside that we've bounced, but right to the 50 retracement of the decline. Took 3 weeks to get down there, 1 week to go halfway back. That's the way the game works. Big gap to be filled over here from overnight on Friday. Fractional little 2 points that I'm not even considering a gap from going back here to last week Friday. But everything still projects to be the same way. We had our first big wave down, our bounce right over here, just as we had our bounce in the very beginning. wave 1, wave 2, wave 3, wave 4 bounce. We should have our wave 5 somewhere down into that 49.18, 48.80 area, and then the dip should be complete. And then we go into summer, and then we go into September. That's what it should be. That's for now. And that's all that we're looking at for the moment. Come over onto the IWM looking at last week. And again, that 196.40 playing itself perfectly. Monday, everything, or on Friday, everything looked pretty decent. We had some really bad data, and the market decided to say, you know what, we don't give a shit about the data. We're going up. And we got the opening bell, and kaboom, straight up to the upside. 196.40 is still kind of that litmus test area for your bullish and bearish. 199.40 is still the open for 2024. So you are still down on the year on IWM. Come over to the QQQ. And again, everything is inside the QQQ. Big, slow decline, never ever breaking below 43.50, or sorry, 435, 433.50. And then the big move to the downside. 7.5% over the course of just a few days. Now we've got our bounce coming right up to the exact same thing. Same exact place. The 50 retracement of the entire decline came right up to it there on Friday, closed right down just fractionally, 2 pennies, 3 pennies, 21 pennies right below it. And as you see there, this fucking sucks line, 433.50, not having been reached yet, but that was the name that we gave this because that went on for the better course of 6 weeks of not being able to break down below that 433.50. So nice first move down, boom, boom. Number 3, just below the 200 extension, 50 retracement. Very possible to get a little bit more on this, like I said, a little bit higher over the course of the next couple days. And then the more likely and more preferred view for the move to the downside as we go into May. I believe that's it with this chart, so I will move you on to the futures. And here, looking at a very simple 5-day futures chart. Coming down here on Monday, that's your lows of the week, your big move on Monday that we knew we were going to get green. Tuesday to the upside, then your decline on Wednesday, and then even more so on Thursday after Meta reported. And the bounce began on Thursday morning. And from Thursday morning into the Google earnings report, up to the upside and going absolutely nowhere all night long on Friday. And then Friday, as much as it looked that the market was up, the market did absolutely nothing. Actually, I'll move back to that. Let me go back to that just to be able to put this into context for all of those who spent the majority of on Friday, staring at their charts. 10 o'clock in the morning. From 10 o'clock in the morning, you did nothing. You went from 50.95 to 41.15, a 20-point range. You did nothing. And again, you closed below 5,100, just like you were expected to do. So back onto the charts, looking at the futures, just looking at the health of where we were. Here you are, the 50-day, 20-day up above on the the ES. The 50-day, the 20-day still being up above. We did break above the 5-day and the 10-day on the move there on Friday. 100-day moving average, having been visited earlier last week on Friday, sitting down here below, expecting to see revisit. 200-day, too far away. Over here on the Russell futures, 50-day, way up here on the top side, 100-day acting as resistance all week, 200-day moving average moving up and slowly creeping into view. Again, not much to be done there other than a lot of bank failures that are going to be taking place in the near future. Looking over on the YM having peaked over here on Wednesday, very large decline, right down going negative on Thursday, and then the bounce begins. And here you are on Friday with a little bit more effort than what you had over there on the ES, but still closing right at the 100-day moving average. And then you come over onto your NASDAQ. Your NASDAQ, because everything's inside the NASDAQ, and the NASDAQ having had that big drop right back down to the 2023 highs. Again, over there on Monday morning, your fractional little bounce, tiny little range day there on Monday. Then you move to the upside as you went into Meta earnings, and Wednesday morning, topping out right there at that minus 5% line. The big decline, the big reaction off of Meta. And Thursday, as everybody knows, right on up to the upside with Google and Microsoft coming after the close. Downside move overnight, and boop, everything is hunky dory because Google is going to save our lives. 50-day moving average still well above, as well as the 20-day moving average, 100-day moving average having been broken overnight on Friday. So, a lot to be said about this being a bullish market for the moment. And once again, how I would be sitting with going into this week. If you are scared, if you are worried, if you are panicking, don't do anything until the FOMC meeting comes out on Wednesday. Now, if you are crushing it and you are absolutely loving how these 32 trades are going further and further away, making it ever so more peaceful to be in these trades, stick to the 32 trades. You want a day trade? You better come and bring your game. Come and bring your game if you want to day trade. If you want to do these zero DTEs, and I am not talking about doing these credit spreads. But if you want to be doing these zero DTEs on the SPX, QQQ, SPY, IWM, and doing them, playing the calls or playing the puts, single legs, and you're not bringing your A game, you're not coming in with your homework done, and you're going to start asking questions after the opening bell about it, you're going to get tough love.
You're hurting me! You're hurting me! Ow! 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 Help! Help!
Because until you wake up and start doing things the right way, all you're going to do is keep repeating the same mistakes that you've been making prior to coming over to me. I can't fix stupid, but I can fix who wants to be helped. And I'll go out of my way to do that. So enjoy yourselves. Oh, here you go. Last thing, FOMC meeting. I've got it tracked. I have all the FOMC meetings going all the way back to January 27, 2021. I have them all. None of these matter from 2021. None of these matter from 2022. And again, from where we have recently been, the March, little bit of a pause. We're still waiting for the data. Not big of a deal. Little 46-point range day. Wasn't a amazing day, March 20th, if you remember. January 31, big, because again, it was the last day of the month as well, January 31. So coming into Wednesday, again, having seen where we've come from and the health of where we've gotten to over on the SPX, there is a very strong possibility that the FOMC meeting is going to provide this gap from Friday to be filled. Very simply. Very simple that we should be able to see that this gap here on Friday gets filled. Whether we break down below it and break down below 50.27, I can't answer that question for you until we get to the FOMC meeting. But on Wednesday, I fully expect that we'll be filling this gap down here below, and then we'll see what we've got, because this very well could be ABC. This is the wave one. We get a wave two to the downside, and as long as it doesn't break down below this low that we had here on Thursday, that 49.90, they could convert this and turn it into a end of this and make it into a bigger ABC correction to the upside before we get another move to the downside, which could be delayed until June. We simply do not know. But as of the moment, everything is looking quite well that as we go into Tuesday and Wednesday, Monday, Tuesday, we should still be looking for some attempts to be pushing a little bit higher over the course of the next couple of days. Then we should start to see our downside move. And What could be the reason is this Japanese yen. This thing is some scary shit, but there's so much going on all over the place. Again, it's above my pay grade. I don't know how to answer the questions about how the yen affects everything. I can't answer that for you. But looking at this from a wide point of view, I can definitely say that when we come up here to 160, 160.35, and we break the 1990 highs, there's going to be some questions that need to be answered, and those are going to be, pretty boisterous. So keep an eye out, keep a lookout. But yeah, we are definitely going into levels that the Japanese yen is eventually going to become a factor in everything that plays in. So enjoy your Sunday, enjoy every single thing that you eat today, because we have some new challenges that are going to be coming up after this week. And I'll give you a little highlight here. We're going to do the Mike Tyson push-up challenges. We're going to start out with 10. We're going to try and work our way up to 250. And Jesse, I want to see you be able to do this. You will be an absolute monster.
For me to come out, it must mean I'm a teacher. It must mean I'm not the same.